On April 2nd, 2025, a silent revolution rewrote the energy map of North America, not through armies, not with fanfare, but through a simple redirection of oil.
It's years behind schedule and tens of billions of dollars over budget, but oil is now flowing through the Trans Mountain Pipeline expansion. Expansion means more Canadian crude is now being shipped from Alberta to the BC coast. It nearly triples the flow of oil to 890,000 barrels per day. And
Canada, once a secondary player in the global energy game, completed the $34 billion Trans Mountain Pipeline expansion TMX, enabling the flow of 890,000 barrels per day, not south to Houston's sprawling refineries, but east across the Pacific directly into the ports of China. At that moment, the United States quietly lost control over a resource it had long taken for granted. A resource that once fueled the world's strongest economy now flows to new hands, bringing with it power, profits, and geopolitical leverage. $20 billion a year now bypasses American markets. Gasoline prices in the U.S. are projected to climb up to 80 cents per gallon. Refineries, many calibrated specifically for Canadian heavy crude, now face the first major supply crisis in decades. Meanwhile, Chinese corporations like Rangshan Chemical have locked in multi-year contracts, ensuring secure energy flows regardless of Washington's political strategies. No parades, no headlines, no immediate crisis alarms. Just pipelines, supply contracts, and a quiet transfer of global influence. Decades from now, historians will look back and point to this event, this seemingly routine infrastructure achievement, as the pivot when the balance of energy power shifted eastward. Today, we reveal 5 tectonic shifts already underway, and why the empire that once fueled the world with oil might never fully recover. Number 5. TMX Unleashed, Canada's oil independence ignites. Over 15 years of political infighting, environmental litigation, and skyrocketing costs, from an initial estimate of $5.4 billion ballooning to $34 billion, the TMX project finally went live. But TMX is not merely a pipeline. It's a declaration of energy independence. For over half a century, 98% of Canadian oil exports were funneled to the United States, often at a $15 to $20 discount per barrel compared to global markets. It was a system that benefited U.S. refineries while keeping Canadian producers at a disadvantage. Environmental protests blocked access roads. Indigenous land claims triggered multiple project halts. Political leaders changed course under pressure. Yet, May 2024 marked the turning point. Canada realized it could no longer accept being economically cornered. By opening TMX, Canada tripled its oil export capacity, unlocking routes not just to the U.S., but to Japan, South Korea, China, and beyond. VLCCs, massive oil tankers capable of carrying 2 million barrels each, now crowd the western coast, waiting to ferry Canadian heavy crude to new buyers. For the first time in modern history, Canadian oil wasn't priced in Houston. It was priced by the global market, and with every shipment eastward, America's energy grip quietly weakened. Number 4, Trump's tariff gamble backfires. In early 2025, President Trump launched a bold but risky move. A 10% tariff slapped on Canadian oil and gas exports, framed as a measure to protect national security. The goal was clear: force Canada to renegotiate energy flows under terms favorable to Washington. The result, however, was entirely unexpected. Rather than bend to pressure, Canada leaned fully into TMX, and within weeks, China's Rangshan Chemical signed contracts to purchase 200,000 barrels per month, beginning June 2025. No lobbying, no diplomatic pleas, just commerce. Goldman Sachs quickly revised its projections. U.S. gasoline prices could spike 80 cents per gallon. Oil markets would experience volatility unseen since the 1970s. Refineries reliant on Canadian heavy crude would face severe bottlenecks. What began as an attempt to reassert American leverage triggered the very opposite. Canada diversified, and China secured a new, stable source of energy outside U.S. influence. And once those tankers started sailing east, the political leverage they carried sailed away with them. If you're finding these hidden shifts insightful, be sure to like and subscribe. Staying ahead means understanding the real moves shaping tomorrow's world. Number 3, China's oil chess game. Strategic takeover quietly begins. In just months after TMX opened, China moved from being a major buyer to a strategic player inside Canada's energy sector. The establishment of Rang Shang's headquarters in Calgary was no accident. This was not just oil trading, it was long-term supply chain control. Multi-year FOB contracts allowed Chinese companies to own barrels at dockside, without intermediaries giving them maximum flexibility. Redirect cargo to China, Japan, India, wherever demand or geopolitics required. Hedge against U.S. or Middle Eastern disruptions. Set their own energy terms in negotiations. Moreover, China's footprint in Canadian energy fields provided intelligence, access, political leverage, and economic anchors deep within North America. In contrast, American energy buyers accustomed to dominance now find themselves competing for leftover barrels on the margins. The silent pivot from dependency to dominance had begun, and the U.S., still focused on tariff wars, hardly noticed. Number 2, refinery shock, America's hidden energy weakness exposed. 3.9 million barrels per day of Canadian crude feed American refineries, the majority of U.S. imported oil. But refining heavy crude isn't a simple matter. Refineries in Texas, Louisiana, and the Midwest have been engineered over decades specifically for heavy sour grades, not the lighter, sweeter blends from Saudi Arabia or Nigeria. Losing even 20% of Canadian supply could slash refinery utilization rates, cause billions in retrofitting costs, trigger layoffs and capacity closures. Wood Mackenzie warns, without Canadian feedstock, U.S. gasoline prices could rise by 80 cents per gallon and diesel by even more. This isn't a temporary glitch. It's a structural vulnerability embedded deep in America's industrial framework, a vulnerability now exposed. In energy wars, physical logistics often decide outcomes long before politics catch up, and the clock is already ticking. Number 1, silent revolution, Canada's rise as an energy powerhouse. Canada isn't simply diversifying, it's building an energy empire. $6.5 billion global markets accelerator launched to expand Canadian exports to Asia and Europe. $40 billion LNG Canada project nearing completion, shipping liquefied natural gas directly to Asia. 42 terawatt-hours of electricity exported to the U.S. in 2024, equivalent to powering 4 million homes. Future plans include new Arctic LNG routes bypassing Russia, hydro expansion to Europe, strategic rare earth mining to challenge China's dominance. By 2035, Canadian energy revenues could surpass $500 billion per year from oil, gas, hydro, and LNG combined. In contrast, U.S. energy policies remain reactive, focused on short-term electoral cycles rather than strategic realignments. And while political debates rage, pipelines quietly redraw the world map. Canada no longer seeks validation. It charts its own course, silently, steadily, irreversibly. Empires don't always crumble in dramatic fashion. Sometimes the collapse is quieter, disguised as market fluctuations, slight price hikes, routine infrastructure projects. April 2nd, 2025 didn't produce global headlines, but the consequences will echo for decades. The flow of 890,000 barrels a day, no longer heading south, means more than economic loss. It signals a fundamental erosion of influence. And in a world where energy is leverage, losing supply chains means losing negotiating power. The United States still holds massive economic and military assets, but the era of uncontested energy dominance is fading. The question isn't just, can America regain energy control? It's deeper. Will America recognize the shift before the next crisis makes it undeniable? Because by the time oil shipments realign, supply chains redirect, and alliances recast, it will already be too late for easy fixes. Drop your insights below. And if you want early perspectives before they become history, be sure to like and subscribe. You're not just watching change unfold. You're already ahead of it